The Fed has ruined the party. Hello everyone, this is Ahmed Saleh and this is the weekly market recap. For the key messages, the Fed reduced the interest rate as expected by 0.25%, yet he surprised the market by having 2 cuts next year instead of 4. In September last year, they explained that they will have 4 cuts, but today in the dot plot they mentioned that they will have only 2 cuts, which surprised the market, and it was a very bad surprise. Yet on Friday we had a lower PCE data, so the inflation in prices decelerated in November, which was a good news that balanced a little bit the surprise from the Fed market. The next period will be very volatile, and there is a fight between the bull and the bears, so be ready with your stop loss in case of any profit taking. And now to the details. So last week, the main highlight of the week was the Fed. They reduced the number of rate cuts next year to 2 instead of 4, and the market reacted very negatively. The S&P, Nasdaq, Dow Jones, and Russell went down by 2 to 4%, and it was one of the worst days since a long time ago. This week we had all the indices down. Even that with the PCE data that came better than expected and the prices decelerated versus November, didn't increase as much as expectation, yet the week ended negatively. We had the S&P equal weight and the Russell 2000s lagging also, as every week they are lagging behind the mega cap and the mega technology. So December overall is negative, and very big negative in S&P equal weight and Russell 2000s. The only winner was Nasdaq with 1.8%. The year is still very good in the S&P and the Nasdaq, one of the best years, and the S&P and equal weight are still lagging behind. So with that, we are seeing now that there is a fight between the bull and the bear. So just take care of that, and let's see what's going to happen next week, but be ready with your stop loss. We are having a very good support in the S&P 500 around 5868. So this is support where a rebound happened on November when the market corrected after the huge increase of Trump winning. And if we are above this line, then it is safe. You can be in the market. You can start initiating position. There is no problem. If this line is broken, the 5868, then be careful. It's a very bad sign and you have to be out. That's for the traders, of course. For the investor, it's totally different. You can add when you the market goes down. So this is the main difference between trader and investor. You have to define who you are. There is a video that I mentioned about this. I'll put the link at the end to define who you are. Are you an investor or are you a trader? So overall, the market, we mentioned last week, by the way, on the video of the recap last week, that there is a correction that's happening, and just take care about that. So again, be ready if the correction is happening again, and if this line is broken, be ready to take your self and go out of the market, as easy as it is. All right, next week it's a thin week because we have on Tuesday we have an early close at 1 p.m. We also have Wednesday is off. So what I suggest is to just wait and see what will happen. Will the bear win? Will the bull win? Who will win the battle? So we have to see what's going to happen next week, and then we take a decision based on that. Finally, I wish you a very Merry Christmas and Happy New Year to all those who are celebrating the Christmas, and Happy Holidays to everyone. If you like this series, please press like, share it with your friends, subscribe to the channel, and if you have any question, put it in the comments. And again, just a reminder, this video is for educational purpose only and should not be considered as a financial advice. Any investment is at your own risk. All right. Have a great week and have a great trade and have a great year next year and enjoy the trade. Thank you very much.